Hello, today is the 8th of June 2024. As always, we'll begin with our disclaimer. We'll go over our calls. We'll make some predictions. We also have some important things to say about the long-term patterns. This is my trading plan for Monday, which is June the 8th, June the 10th, 2024. Please remember my calls can be completely wrong. Any trade you make should be made at your own risk. I had some more time to look at the market over the weekend. I think we could have made a major high on Friday. People not familiar with the system I use should be aware that MEJT calls targets. It doesn't call entries. It doesn't call exits, even though there are areas of resistance and support around the MEJT prices. These are the patterns we should see next week. And we said on Thursday, a friend of mine had a date for a possible high on Friday, timing date. I think that date's looking pretty good. Call for the pattern with the early high, which is this. Monday should have the early low. The typical thing here is a rally into the close. Well, that didn't happen. It can sometimes spill over into Monday's open. So if we open up here, we get the normal pattern. But when it fails, you get a straight line drop, and that looks like a straight line drop to me. When you get the straight line drop, we typically close nearer the low than we did, and so that can also spill over into Monday's open. So if we don't get the normal pattern, we should gap down, in all likelihood undercut this low. So early Monday, I think we're going to trade out of this range. We have a MEJT target from yesterday's patterns, 53.7509. If we don't if we don't gap down smartly, the rules call for it to print. I think the odds are we're going to gap down smartly. Do not forget that MEJT almost always will leave a failed price target at a major change in trend, and this could be just such a major change in trend. Here was the buy signal. The targets overtake this high. I don't think that's going to happen. We have a DeMark 13 count. Nothing's happened the last 3 weeks. Nothing happens the last 3 weeks. Don't look for a collapse, but that doesn't mean you won't have a drop. Well, here's our long-term count. We've completed an ABC, which lasted about a whole generation. I know other people are counting this as wave 3, and that's wave, and that's a fourth wave. That's just the wrong count. This is wave 3. It should be a 5-wave structure, and there's no valid way to count this as a 5-wave structure. You can start out by looking here, which some people are calling wave 1. You just can't count this as a 5. Having completed a 3-wave structure, it was my plan to look for an impulsive 5-wave rally which could last a generation. If that's true, this should be a 5-wave structure. It's possible to count it that way. I just don't think it's a very clean count. It looks more like a 3. And if it is a 3-wave structure, this ABC over a generation could be an A of larger degree, followed by a B and a C, all of larger degree, which could last for decades. Here was our wave C. Here's our channel. We've been stalling at this channel, and we still are. Let's see how to count this. I mean, I can count this as 5 waves up completed, but you really have to fudge too much. This third wave just doesn't look impulsive enough for me. I can count this, I can count 1, 2, 3, 4, 5, but this should subdivide into a 5. That should subdivide into a 5. To do that, you have to go to smaller time frames. You really have to fudge. Maybe you won't break any rules, but when you have to fudge, I just assume it's the wrong count. This could be an ABC with a 5th wave truncating. Doesn't break any rules. I just don't like the way this third wave looks. I think there's a very clean count, a very clean three-wave count, ABC. No fudging, no trying to make things work. The fibs are all there. We completed it right on Friday. If that's the right count, that high is going to hold. If that's the right count, we've completed a wave A. Now, one observation I have is this isn't Elliott's work, but I think it works a very high percentage of the time. If we've completed an ABC in green, and we're due for one more ABC of that degree, early on these subwaves should have some kind of relationship to the subwaves here. So this wave A should have some kind of Fibonacci relationship to that wave A. As you get further on in the pattern, it just doesn't work that well. But for the early waves, it often will. Not claiming it's a hard and fast rule, but it's worked often enough. So if you take wave A here instead of the 61.8% and compare it to what could be wave A here, I mean, that's 100. I mean, this doesn't work out exactly to 1.61. I think it works out to 1.622, but there is a relationship between these waves. And this counts as a three-wave structure. Monday's pattern has the early low regardless of how we open. There's a higher MEJT target unless we gap down smartly. The rules call for it to print. But, capitalized, but, that system typically leaves a failed target or major changes in trend, and there's considerable evidence that that's what Friday's high was. Friday's pattern didn't close near its high and features a straight line drop. Unless the pattern is vitiated by gapping and promptly overtaking the high a day, that should lead to a further decline. The new all-time high was rejected by closing in the red and under multiple prior highs. More NYSE stocks hit new lows and hit new highs. The percentage of S&P 500 stocks over their 200-day moving average actually dropped. These are all breadth indicators, and breadth is lousy. It means fewer and fewer stocks are carrying the averages higher, and that's an unsustainable situation. VIX hit a new low. It's a sentiment indicator. People are too optimistic. The higher the VIX is, the more premium retail customers are willing to pay to buy puts. When it gets low like this, it means they're very optimistic, and those people are usually wrong. The wave count is cleaner if we have a three-wave structure which has completed. Now, if that's the right count, the implication is the quarter-century-long ABC pattern we completed last year will be followed by another long consolidation rather than the generation-long advance we would see if we were in a five-wave up pattern. So we have a possible top of significance here, even though I think we'll surpass it later on. If that's the right idea, we're going to have a sizable drop, even though I think we'll recover, and we're going to probably be in a consolidation for decades to come. If it's the wrong idea, you should know pretty early, because here's your stop over that high. Now, if it breaks it by a penny, I don't care. But, I mean, it really should start dropping right away if that's the right idea. If it's wrong, that stop is certainly close enough. So it's the pattern with the early low, possible high of significance, and negative implications on a grander scale, a longer-term scale for the market as a whole. And that is today's call.